This was the year the US inflation crisis ended for policymakers and the central bank.
Inflation has eased substantially.
But not for voters.
Are you better off now than you were 4 years ago?
Anger about the impact of price rises contributed to Donald Trump's presidential election victory over Kamala Harris on November the 5th.
In many ways, it was a classic case of the headline numbers looking strong, solid economic growth, low unemployment, and inflation largely under control. But voters simply weren't feeling it, especially on the latter. Groceries in the US are now around 25% more expensive than they were 4 years ago. So even though incumbent President Joe Biden and presidential candidate Kamala Harris both touted the benefits of their administration investing around $1 trillion into the economy, Trump's complaints about inflation resonated much more with Republican and swing voters.
Nevertheless, Trump is inheriting an economy in decent shape to launch an agenda that includes tax cuts across the board. But some economists say these breaks will add trillions of dollars to an already enormous national debt. And if those tax breaks are a throwback to Trump's first presidential term, so are trade battles.
The most beautiful word in the dictionary to me is tariff.
The president-elect is promising to hit major trading partners, including Canada, Mexico, the EU and China, with steep duties on their imports into the US, prompting Canada's Prime Minister Justin Trudeau to start negotiating with Trump even before the latter is inaugurated.
It was an excellent conversation.
Trump claims these duties will protect American jobs from cheaper overseas competition. But some studies on the impact of tariffs during his first presidency suggest they partially backfired by raising costs for businesses and consumers, if only marginally. Owen Fairclough, CGTN, Washington.